If you're a Canadian homeowner and you've done research on the Manulife One, you've seen one of two extremes. On one end, it is the smartest mortgage product in Canada. On the other, it's a trap and you will pay more in interest than if you just went with a regular mortgage. My name's Jeff Dinsmore. I'm a mortgage broker. I've done enough volume with Manulife that's put me in the top 10 mortgage brokers in Canada. And this might surprise you, although I love the Manulife One, I believe that it is oversold to the wrong person. In the next 13 minutes, I'm going to go over the pros and cons, tell you when it does not make sense for you to get a Manulife One, and also a situation or a couple situations where you should look into the Manulife One when your mortgage comes up for renewal. So before we get into it, let's talk about what the Manulife One is and what makes it so polarizing. Well, it is essentially very similar to the mortgage and lines of credit combinations that you see at most of the major banks. The difference being that you can use your line of credit as a bank account. So you can deposit your income into your mortgage every pay and then reborrow that money when you need it throughout the month. So why would someone do that? Well, the interest is calculated on a daily basis. So the days in between your pay going into the account and the expenses coming out, you're saving interest on that amount of money. Why? Well, your balance is decreasing as your pay is going into the account, and then it's only increasing back when you reborrow the money. That time in between, that's where you're saving money. That's it. There's no magic beans. There's no craziness that goes on behind the scenes. It's essentially just an income in and an expense out. So one of the common things that we hear is that the home equity line of credit is a higher interest rate than a regular mortgage. So although you might save on some of the interest, because the overall interest rate is higher, it doesn't make sense. Well, Manulife One allows for you to lock in a portion or the full amount of your debt into a mortgage. The benefit being is the locked in fixed rates are going to be lower than what the home equity line of credit rate is. And this eliminates a lot of that issue. However, I'll say this, there is always going to be a portion on the line of credit when you pay down the mortgage and then reborrow. So that argument does have some fact, but it's not on the full amount. It's just on the difference between the money coming in every month and the money going back out. Here's something that I don't think a lot of people talk about. People who love the Manulife One only sell it like a bank account. And yes, if you use the Manulife One like a bank account, it acts like a bank account. If the Manulife One just has great rates and you want a mortgage with a line of credit, if you don't deposit your money into the home equity line of credit or the Manulife One, it just acts like a regular mortgage with line of credit. So you can choose whether you want to take the Manulife One and use it as a checking account or not. So before we get any further in the video, if the Manulife One's not for you, let's get those out of the way. There's three things that I look at that would make the Manulife One not an option for you. So how do I decide whether I want to use my Manulife One as a bank account or just as a mortgage line of credit? The first one is if you want to just set it and forget it, do not use the Manulife One like a checking account. It does take you looking through statements from time to time to make sure that the overall mortgage amount is decreasing month over month. The second is if you hate tracking money or if you hate budgeting, just use the Manulife One like a regular mortgage or line of credit. The third thing is if you tend to spend all of the money that's available to you, the Manulife One in general probably isn't a good option for you, but especially not the option where you're using the Manulife One as a checking account. So we've been pretty negative on the Manulife One. So what are some of the reasons why people would want to take out a Manulife One? Well, the first is flexibility, payment flexibility in general. So this would be someone who's self-employed, who has commissions, who has large fluctuations in income, or for people who have rental properties. To have the flexibility if someone doesn't pay rent, or if you have a bad month or a bad quarter, to allow for you to ebb and flow money into and out of your Manulife One is hugely beneficial. The second reason is you can park all of the money that you have set aside for rainy days and just save interest on it. I know people who have a $10,000 fund in case the roof leaks, or $5,000 vacation fund. Putting that money into your Manulife One will reduce your overall balance and reduce the amount of interest that you're going to pay over the long run. Once you want to go on vacation, once you want to replace your roof, just take that money back out. But it has earned you money rather than just sitting in a regular checking account making you $0. This is why it's important. If having the money there, you haven't saved up for a trip, but having the money available makes you go on 5 or 6 trips a year, the Manulife One probably isn't for you. Number 3, the one that's the most sold, but probably the least actually used, is for people who have maxed out their TFSAs and RSPs and want to continue to invest and make their mortgage tax deductible. There's a way to do that. And now the CRA is very strict on how to do this and how to structure this. So it is super important to talk to an accountant, but it is funny. It's probably a very small portion of the population who actually can take advantage of making the mortgage tax deductible through investments specifically, and is often the one that's most on social media. There are a couple of other strategies that we'll talk about if you own an investment property, things along those lines that are more common for people, but this true investment play to make your mortgage tax deductible is probably the least likely, or the least amount of people who actually take advantage of it. So a quick note here, if you haven't maxed out your TFSAs and your RSPs and you hear people talking about investing to make your mortgage tax deductible, that's probably not for you. So why do people hate the Manulife One? Well, first of all, is discipline. If you struggle with spending, it's like putting chocolate cake in the bedroom. It is very difficult when you have money available and you are not disciplined to not spend it. So if this is you, the Manulife One is not for you. The other problem is the never-ending mortgage problem. And this happens when the amount of money that you put in and the amount of money you take out on a monthly basis ends up continuously being the same. You feel like you're paying down your mortgage, but in the end, after 5 years, the mortgage balance is the same as when you first started. This can be demoralizing and super frustrating. This is why we recommend every few months to continue to check your total mortgage amount to make sure it's decreasing month over month. And if it's not, you probably should not use the Manulife One as a checking account and just use it like a regular mortgage with a line of credit. Number 3, the rates versus a regular mortgage. In some instances, the Manulife One does not have better rates than other places. So sometimes if you're not using it as a mortgage, line of credit, and a checking account all in one, if there's a better option for one of those mortgage line of credit combos, it actually makes sense to go elsewhere than it does to use the Manulife One. And the last one is complexity, or really just bad advice. A lot of people who are pushed into trying to make their mortgage tax deductible, they haven't paid out their TFSA, they haven't had their RSP maxed out, and they're trying to do this just to save a few bucks on one end. And here's the problem. It is a complex thing that involves your accountant, your mortgage broker, as well as your financial advisor. So that does take time. Once it's set up, it's usually pretty straightforward if it makes sense for you. Here's the problem. A lot of people think that it makes sense for the vast majority of people, and that's just not true. The numbers state that RSPs and TFSAs are not maxed out for the vast majority of Canadians. So most horror stories that I see with the Manulife One aren't from the mortgage product itself. It's when the Manulife One is paired with the wrong people, the wrong advice, or the wrong spending habits. One more caveat that most people miss is that any mortgage line of credit combination is registered as a collateral mortgage. A collateral mortgage just means that a lender can re-lend you money on a regular basis without having to requalify. And in a lot of cases, and in some cases, other mortgage lenders will not be able to transfer the mortgage over at maturity when you have one of these collateral charges. So for instance, right now we have Meridian who's offering a great rate. If you have a collateral charge, you're not eligible for that rate. So it's something to be aware of. And this is true for any mortgage line of credit combination. It's not all lenders, but it's important to know. I did say that I was in the top 10 for mortgage volume for Manulife across Canada. So where do I sell this product, or where do I recommend this product to people? The first is if you own a rental property, I think the Manulife One on the property that you live in is one of the best things you can do. And here's why. You can use the rent that you receive, flow it through the property that you own, and make it tax deductible. It doesn't require you to have a huge amount of money in your TFSAs and your RSPs. If you own a rental property, this is a pretty simple way to make sure that you pay less money to the government. The second is as a tax and HST float if you're self-employed. Often people either pay their taxes and HST on a quarterly or yearly basis. Having money sit in an account making you $0 of interest. If you were to pay that into the Manulife One, the interest that you would be charged would be considerably less, and you just re-borrow it when you need it. Obviously, we work with accountants to make sure that the rules for certain holding companies are followed, but this is a common thing that we work with people to make sure that their money is actually working for them. And honestly, the last way is the boring method. Just as a mortgage and line of credit, when the mortgage rates are better with Manulife than anywhere else. And I do feel like this is something that even Manulife doesn't necessarily know that their product's good for, and something that I have been able to recommend Manulife a lot because their rates over the last couple of years have been considerably lower than other major banks. And that has been a huge benefit. But because of the push for the Manulife One as a checking account, I feel like the vast majority of people who have or who try to give the Manulife One to clients miss out on this pretty easy opportunity. Again, this becomes a rate game. This makes sure that you have the lowest interest rate and that the line of credit is in the right fit for you. Okay, I've talked a lot. Now, how do I make a decision? How do you make a decision whether the Manulife One is great for you? And there's 4 questions that I want you to answer. If you answer no to all 4 of these, don't bother looking into the Manulife One any further. If you answer yes to at least 1 of these, it's worth looking into. If you answer yes to 3 or 4 of these, then I'm probably looking at the Manulife One for you at your renewal. The first one is, are you currently maxing out your RSPs and your TFSAs on a regular basis? Number 2, do you have rental properties or fluctuating income? Number 3, are you good at naturally tracking income and cash flow? Number 4, are you comfortable with a product that makes you have a plan rather than just a set it and forget it mortgage? So look, I hope this video was helpful. I hope you were able to find out some more information on the Manulife One, the good, the bad. If your mortgage is up for renewal and you're considering the Manulife One, that's awesome. If your mortgage is not yet up for renewal and you want to make sure that you're paying the lowest amount of interest you can, click the link in the description, sign up for our free mortgage monitoring. We will look at your interest rate and the penalty and tell you if it makes sense to break the mortgage or not.